Hello guys and welcome to Follow Up Trades.
In this video, we're going to talk about a couple trades we took this week. To start with, I'm going to talk about GBPCAD and then Ryan's going to talk about CADCHF.
Let's get into
Okay
it.
guys, so this is GBPCAD. Starting on the weekly time frame, I do have this psychological resistance level at 1.76 and a psychological support level at 1.6. I do also have this mid-range level, psychological level of 1.66, and looking at the weekly time frame, looking at the structure, we have actually rejected it recently, made an impulse to the upside, rejected 1.76, did make the impulse to the downside. However, we did fail to retest 1.66 and instead just made another rejection at 1.76 this week. So let's jump down now to the daily time frame to look at the market structure. So looking over here, price did impulse away from 1.76 with an impulse to the downside and then come back and retest support and use it as resistance. So I do have this level across here where price impulsed through, came back and used it as resistance. Price tried to make another impulse to the downside, but instead what actually happened is, as you can see, price formed a double bottom, which is a bullish reversal pattern. So we can draw in our double bottom here. So straight away from this double bottom, we're considering buy positions. However, we are not taking buy positions because of this level in the market across here. So we need to, in order to take buy positions, we need to see a break above this level. And as you can see, price did come back up to retest this level at around 1.72 and reject to the downside. So creating our first higher low in the market. So this is our first higher low. And this actually goes in line with this structure down here where price actually made its first lower low. So we can start to predict that perhaps we are making a inverse head and shoulders pattern, with this being the left shoulder, this being the head, and this being the right shoulder. And as we know, with a head and shoulders pattern, we always wait for a break of the neckline, which is above 1.72. So let's jump down now to the 4-hour time frame to have a look at what the market structure was looking like. So ever since this double bottom, we did make bullish market structure. However, when we reached 1.72, we were actually making bearish market structure. And what this actually looked like to me, if I draw in some trend lines, we can see that price was actually making an ascending pennant pattern. As you can see, we are making higher highs. However, we are making higher lows, but we are struggling to make higher highs, and we are actually making lower highs across here. So in order to take buy positions, we want this to be broken out of. And as you can see, we did break to the upside and then we did pull back to retest with the continuation to the upside. So looking now on the 1-hour time frame, the zone I do have in place across here at around 1.72, we did break above and then pull back to retest. Now, the way we were actually pulling back, if I just zoom in, was actually correctively. So we were pulling back with bearish market structure, which you'll see a lot more clearly on the 15-minute time frame. So although we're pulling back, we don't want to be taking buy positions straight off support. We want to wait for some confirmation that the bearish market structure on the pullback has actually been broken. So if I show you what it looks like on the 15-minute time frame, so here, what price is actually forming is a bearish pennant pattern. So it's a squeeze pattern. As it's pulling back towards 1.72, we are actually squeezing. So we need to see a breakout of this. And if I show you clearly with the trend lines, something along these lines here, with a support across here. So we are making this descending pennant pattern. As you can see, we're making lower lows and lower highs. However, they are slowing down. So we are seeing a slowdown in momentum at this level. And what we would like to see is a breakout of this pennant pattern before taking buy positions. So let's jump back onto the 1-hour time frame to see what this would have looked like. So as you can see, when we did actually reach support, we did form this morning star. However, this isn't enough for us to get into the trade because we are still inside this pennant pattern. So we waited for the next hour candle just to break out of this pattern, and that would have been our entry point off of that. So that was our first initial entry on this trade with a stop loss just below, and then that had an impulse to the upside. So now let's jump on the higher time frames just to look at our targets, because if we was to target 1.76, that would have been around a 1 to 16 trade. But we knew the possibility of the trade reversing us was high at that point. So we don't want to be greedy. We want to look left and see if there are any possibilities where the market might actually reverse on us. So we did actually see a level at 1.75 through here. As you can see, we do have some rejections across this market. So in order just to not be greedy, we found a place in the market where we'll be happy to take our profits just in case the market does actually reverse on us. So where that actually was 1.75, and we did actually was able to make a 1 to 12 on that. So yeah, we was actually able to scale into this trade as well. So looking at how we manage this trade now, jumping back down to the 1 hour time frame. So we impulsed away straight away made big movements to the upside. However, as you can see, we almost formed a double top formation. So looking at price at this level, and then looking when price actually got to that level during the trade, you can see that there was a slowdown in momentum. Price did form a doji followed by this bearish pin bar. So at this moment in time, we're thinking to ourselves, there is a possibility that price could reverse on us and pull back. So we were able to make sure that our stop loss was at break even at that moment in time. So we moved our stop loss to break even to protect our capital. It's a key area of risk management. So we now know that this is an area of resistance. And then obviously the 1 hour candle straight away after that engulfed to the upside. So we now have this as a resistance level, potentially for price to pull back and use it as support, which as you can see, it did. So when price moves in the market, it doesn't always go straight up to hit take profit. It likes to move in impulses and corrections. And there are opportunities to actually scale into the trade. So this is exactly what happened with this. So price made this impulse followed by a pullback, and we could predict that potentially this is the pullback for a potential continuation to the upside again. So we used resistance as support, and as we pulled back to retest this support level, we can see the slowdown in momentum. Pretty much every single candle is a doji, so we know there's a slowdown in momentum. And then we had our shift in momentum from this morning star, this huge bullish engulfing. So we was able to actually scale in to that trade like this with a stop loss just below. And then of course, targeting the same level in the market. And then, yeah, so price moved a bit sideways for a bit. And then we did have our impulse to the upside, very strong pound last week. And then, yeah, smash take profit on both trades and was able to make some nice gains on that. So yeah, that's Great British Pound CAD from last week.
Guys, I'm going to run through CADCHF, a trade we took last week. Starting on the weekly chart now, we have found support across here, broken it with a bearish engulfing candle and been using it as resistance ever since. That's why I've got here my key monthly level of 0.785, because it's a key level in the market where price uses it as support and resistance. On the weekly chart, we can also see a pennant which was formed, which is a squeeze pattern. We then broke it to the downside with bearish engulfing candles. And ever since then, we've just been pulling back correctively. This is during the coronavirus time, so it's very messy, but we did pull back to D, as you can see here. And then from there, we had candlestick formations and all sorts, which I'll zoom in on lower time frames, which looks a lot clearer to take our sell position. Jumping on the daily, right, we have a uptrend coming up here, which is our counter trend back up to find support on the higher time frame. So this was just a daily counter trend corrective, and then we had to wait for the break of that before taking our sell position. What else can we see on the daily? We've got the head and shoulders pattern with our left shoulder, head, right shoulder. We draw on this level across here where it was used as support and resistance. So I've done this as a fake neckline. And then, yeah, zooming in, we'll be able to see more how we got into the trades. Looking at price action on daily, these candles are very bearish, engulfing candles. And this candle here is significant. As you can see, we broke right below this level in the market where it was using support. So from there, we're just looking for a little pullback to then take our sell decision. 4 hour, as you can see, we were just pulling back correctively. We did have a big wick here, pull back, and then we did come back. When we retest this level in the market here, we formed the evening star of this. So then jumping on low time frames as well, this will look a lot more clearer of what actually price action was doing. 1 hour chart, this is where we actually took the trade of this break here, but we had to wait for the corrective structure to break first. So what we did was we waited for a nice little corrective structure, which was this. Because as you can see here, we were pulling back up. We did wick down here and then came back up. So when we see this type of stuff, this is a spike in the market, which price was rejecting. So price could have just continued up from here and then headed to the upside. But so what we was doing is we were still sell bias. We had to wait for this corrective structure to break to then take a position, which it did. Which was, as you can see here, was bearish engulfing candle. As soon as we saw that, it was just a trigger to get in, and boom, straight away enter the trade. Stop loss just comfortably just above the last low, last high, just above the wicks. Enough breathing space just in case we do get a spike up. And next see there, literally no drawdown, straight into profit. So how did we manage this trade? Right. So when we got here, I think 1 to 1, yeah, around here. We move stop loss straight to break even. What this does is this reduce you maybe performing a losing trade as because price was coming back bullish. So price could have just continued up to the upside and hitting your stop loss. So by doing this, you was protecting your capital. And yeah, that's basically it, protecting your capital so you stop losing trades. So that was at 175, I think. Yeah. So as you can see, we did pull back. We then formed another corrective pattern, which I think was just a pennant, which is just a squeeze pattern. Yeah, formed some flag sort of pennant, and then we broke to the downside again. And ever since then, we just continued down, and then we actually did take take profit down here at 0.68, which is lovely. Reason why we had targets down there was because across here in the market, we did form this double bottom. So this was a key level in the market, as you can see. So that's where our first target was. Even though price did smash it straight to the downside, more than happy to take a 1 to 3 here because as you can see here, we did have a slowdown in momentum with these 3 dojis. So price could have just impulsed away from here and then we would have been bullish from there. So yeah, happy we had to take targets there. It was all good. And yeah, and that was CADCHF trade we took this week.